What's up traders? In this video, I'll be going over some Wyckoff concepts and teaching you how to apply Wyckoff into your trading to help you become profitable. Implementing Wyckoff is a really good way to get good entries and anticipate price movement in seemingly ranging markets. And understanding just basic Wyckoff concepts can already help you avoid being manipulated out of the market or avoid losing trades. So first, let's just go over some basic Wyckoff concepts before I move on to the live examples. Let's see. So first, let's just go over the basics. So we're just going to go over accumulation and distribution very quickly. So here's our schematic for distribution. As you can see, we've got our preliminary support or supply, buying climax, automatic rally, secondary test, up thrust, UTAD, last point of supply, and here's our sign of weakness. So when thinking about Wyckoff or just using Wyckoff, I'm sure a lot of you guys have already seen Wyckoff, people talking about it. You've probably seen some charts, images of it, but you just really don't know how to apply it to your trading. First of all, the first step you need to take to use Wyckoff is just understanding the actual schematic, which is the easiest part, but you just really need to remember the order of these events. But you also need to realize that not every single distribution is going to look exactly like this. This is just a general guideline. And unlike triangle patterns or all that kind of stuff, Wyckoff can be very flexible because there's no trend lines or anything. You've just got these different phases in Wyckoff and different price movements. And at the end of the day, what Wyckoff is trying to explain or show or predict, in a sense, is institutional movement or the price or the Bitcoin, let's say in this example, moving from weak hands to strong hands. The weak hands in this case being just retail, right? Emotional people, emotional traders. And then the strong hands are going to be those institutions. So what Wyckoff is describing here is how as price is moving up, here is our buying climax. Even though we had an up thrust, this was the climax of buying. After this point, we are distributing. So every single time retail is just buying the stuff up, we are getting sold down by institutions, pretty much. Institutions are slowly selling, accumulating sells, while retail is buying. And eventually, the reason we see up thrusts, and I'll talk about this in future videos, is see there's liquidity up here and basically resting orders, and some people trying to trade breakouts, let's say up here. So what the institutions want to do is just take the price up, and you're usually not going to see a UTAD test. You're usually just going to see an up thrust. So what they're going to do is just take the price up and trigger those stop limit orders of people who want to trade the breakout, and also some stop losses of people who shorted here, and they're going to collect those orders and use those orders to pretty much help them get a better price and help them use that liquidity to short back down. And then eventually there's not going to be any retail or anything left, and they're pretty much just going to short this and price is going to reverse. Now let me explain accumulation. Accumulation is pretty much just the opposite, and I'd say you see accumulation is just distribution flipped pretty much. We've got our preliminary support, our selling climax, automatic rally, secondary test in phase B, spring test, last point of supply, sign of weakness. Yep. So as I mentioned, Wyckoff is pretty flexible. So a lot of the times you're not going to see secondary test in phase B, and the secondary test could be up here, up over here. Like it's not going to always go below the selling climax. And a spring is pretty common, but it's not necessary either. A lot of accumulation models don't actually have the spring inside of them. Like if you just take a look at, um, here, right? This is pretty much you could actually say this is the spring, right? But they label this as a selling or a secondary test in phase B. But this could act as a spring. It's essentially the way you identify it doesn't really matter too much, because as I explained earlier, Wyckoff is just a model for you to spot when institutions are trying to cause a reversal, right? Pretty much. But not in a like retail reversal way. There's not a specific point where it reverses. It's a slow thing where the weak hands transfer their liquidity to the strong hands, pretty much. Okay, now let's move on to the live example. So actually, I was planning on recording this yesterday, and I recorded this trade. But actually, I'm redoing it because this trade actually played out perfectly, and I'll explain why. And I'll also explain why I took this trade earlier today, and why this one also played out. So, as you can see from a standpoint of Wyckoff, this structure here would be considered a distribution pattern. But look at these labeled parts. I labeled these as lower time frame accumulations. And why is that? Well, let's first talk about the distribution first. So first we got our buying climax secondary test. This isn't the most beautiful looking distribution pattern over here, but it does do the job, because as I explained earlier, Wyckoff is just a schematic for interpreting how institutions are reacting to the market and what the order flow is. So the automatic rally could be here, ST could be here. Doesn't really matter too much. But then here's our sign of weakness. Our UT, our up thrust, taking out liquidity highs and moving the price lower to take all of those stops and to push the price down so that institutions can continue selling. And here's our last point of supply. And then we just move down from there. So if we go on a lower time frame actually, or just zoom in here, you can tell why I label this as a low time frame accumulation. And I actually took a trade yesterday with a short like this. Or I put the stop here, and I think I entered here because there was a breaker block which was formed over here, and it was untested. So once we tested it, I think I entered here, or maybe here, and pretty much just rode the wave down, filling out this imbalance, and caught a nice R trade. But that's sniping entries based on breaker blocks is going to come in the next video. So first, we're just going to talk about why this is accumulation. So you see here, instead of this being a part of a larger distribution pattern, we could say that this is our spring, and our buying climax, or our selling climax was this right here, or this, and then we had a secondary test, which could be this or this, and then a spring, and then a test of that spring to move higher. And then I actually took a trade here based on this lower time frame accumulation. I took a trade inside this order block, and I targeted just the breaker block up here. So yeah, you could have taken many trades based on these smaller time frames, and you would have caught decent moves. Nothing too crazy, but just this accuracy you can get on Wyckoff is insane. And then here, at this point, I realized we're probably going to be going into a distribution. So instead of looking at longs, I began looking at shorts because this supposed accumulation wasn't able to break through this order block, right? And this order block was holding really strong because it was an untested level, which we just tested and rejected, and we rejected again. So if I was to look at a entry, I would look at it inside the block, and I think if we just go on the 15-minute, the order block was actually this whole entire area here. I drew the order block on the hourly time frame, but this is a refined version on the 15-minute. So when we traded into this, I pretty much waited for like us to come back up slightly, and took a short right here. And this short was on the 5-minute. So at this point, I wasn't 100% sure whether the distribution was going to play out either, because just because something looks like a distribution doesn't mean it's going to necessarily go down, because this could have been a reaccumulation, which is why Wyckoff is very helpful for getting your entries and whatnot, and spotting potential points of reversal and stuff like that. But you always have to look at what price is doing on a higher time frame, because price was breaking new highs every single day. We broke the daily high here, we broke the daily high here, and then we just went up to take out the high slightly. So we didn't know if we were going to just continue higher. So I just put a safe take profit on this order block. And we took profits here before moving much lower. And because this was a larger distribution, I was able to target these lows down here. And look at this, a 20R trade. Just amazing stuff here. And I took some profits here, but for the most part, we had a really nice trade. And then today, we formed another accumulation here, which I put a long on, and then now it looks like we're just doing some wonky stuff. But these patterns present themselves so often that you could probably just become very profitable by just trading Wyckoff. So this is what it would look like on the 1 minute today on the accumulation pattern, which was this. I teach trading without really indicators or anything, just price action, but I just have this RSI, stochastic RSI here, just for some entries on the 1 minute. I'm not trading based on this. I just find my entry or where I think it's going to pull back into on the 5 minute. And then on the 1 minute, I find like that perfect entry. So I think our selling climax was here, our automatic rally, our secondary test, and then here is our spring. And then after that, we did a test of that spring. Last point of supply. This was really drawn out, so we had a very long period of just like BUs before moving higher, but that was no problem because I took the trade on after we tested. I took the trade like right here, I think. Yup, right after we tested, I took the trade. And the stop loss would be right below the test, or you could put it lower at the spring. Both is fine. And then yeah, we would have taken profits here, and because here was another breaker block which we traded into perfectly, and I wanted to go short here, but this candle just formed so quickly that I wasn't able to close out and open a trade fast enough, so I wouldn't have opened it here, because as you can see, this move was so fast that we needed to fill out the imbalances created here before we could do anything else. And now it kind of looks like we could be forming. This formed another accumulation pattern here that didn't break successfully either. We ran back into this breaker block. So now we just have to see if we break through this breaker block here or continue down. But it looks like it looks like we'll just be ranging for a while, because if we go down lower, we'll trade into this order block here. All these concepts I'll eventually make videos on, but I just wanted to show you guys the importance of Wyckoff, and how how simple it is, yet how like nuanced it is. And it can be as simple as you want it to be, but then you can always add layers of complexity to it to make your trading more profitable. And that just about concludes this video. So if you guys have made it this far, I really appreciate you guys, and I would love it if you guys would subscribe and like the video. Also share it to anyone who is interested in crypto trading. I think this would be very insightful for many traders, just showing the fractal nature of Wyckoff and how it can be applied to pretty much any time frame. Get subscribed if you guys already haven't, and from now on, I've set a goal for myself where I'll probably be publishing hopefully one video per week at least, releasing quality content, more of what you're seeing here, in-depth price action tutorials, and comment what you want me to do next. I'm thinking about doing imbalances, maybe liquidity, something like that. Comment below. Tell me if you guys like the video. All feedback is appreciated. And as always, good luck, happy trading everybody.